Hello, everyone. Good morning, good afternoon, and good evening to all of you, regardless on which part of the world you are tuning in from. I am delighted to welcome you to another promising session of my weekly price action based technical analysis series on the XAUUSD, following our remarkable success reaping over 500 pips in profit from our previous weekly technical step up. In today's video, we will be diving into an insightful analysis of the gold spot commodity through a comprehensive price action perspective. We will also explore the recent movement and chart patterns to uncover key insights that can potentially shape our trading decision ahead of the new week. In preparation for the upcoming week, I have conducted a comprehensive analysis utilizing simple but powerful setups that will be our compass through the current market structure. We will harness the power of trend lines, key levels, and of course, chart patterns to gain valuable insight into the historical price movement of the gold commodity. But before we dive into the technical details, let's take a moment to reflect on the key moments that shaped the previous week. And by revisiting this development, we gain a clearer understanding of where we are coming from and better equip ourselves to anticipate the potential path that lies ahead for the upcoming week. And talking about last week's trading session, the week started on a strong bearish note initially, actually, as we took advantage of a bearish move, scooping about 150 pips thereabout before the bullish momentum began. And it was not until Tuesday we begin to see some buy pressure resume around the $1,922.50 level, and we anticipated buying had the breakout retest of the 1925, and as you can see we had our first buy position triggered, and since that moment we have been buying the XAUUSD. So it was quite a very bullish expectation throughout the first half of last week. Then another key moment came in prior to the CPI data on the 12th of July, where we identified a range between the 1933 and the 1936.50 level, where we were looking out for a breakout or breakdown of that range to give us an opportunity to trade. And as a result of this, we positioned ourselves by having our stop orders at both ends. And interestingly, we had a huge bullish spike that broke out of the resistant line to give us another opportunities to buy. We also added more positions at the breakout of the 1941, and it was at this point we were able to scoop over 370 pips on two positions on this one. So it was quite a very profitable week for us on the XAUUSD. And for those who would like to review this commentary for educational purposes, I have the link to this commentary in the description box of this current video. And if you are watching this from my YouTube channel, you will definitely see this at the top right hand side of your screen. So, with that being said, here let's dive right back into the chat. And our center of focus today is going to be on the 4 hours time frame, as I've been able to identify a simple setup that we are going to be using to guide our trading activity for the week. So what I did here on the 4 hours time frame was to take into consideration the nature of price action since the mid-month of May. And in fact, remember we identified here that price action has been finding lower highs in this market. And as a result of this, we connected a series of lower highs to give us this descending trend line you can see on your screen. And in fact, this trend line has been guiding our bearish momentum so far until a couple of weeks ago. We begin to notice how sellers have been finding it difficult to find new lows. Now, if you look at the structure closely, you would notice that as soon as price action got into that 1000 900 zone. That was like at the beginning of this month, we saw sharp rejections from the buyers. The same thing also happened a couple of weeks ago. We saw another sharp rejection, and the inability of price action to break down the previous low was a clear sign that a bullish momentum is gradually building up behind the scenes. And with this information in our hands last week's trading session, we noticed how price action was gradually transitioning into a reversal pattern. If you look at the structure closely, you will see that we had something like a double bottom structure around this area, which from a technical standpoint is a very strong reversal pattern. And immediately we spotted this last week, we identified the neckline for that reversal pattern, which was duly situated at the 1930 level. And we were anticipating the breakout of the structure last week, which actually happened. And one interesting thing about that neckline is the fact that it also shares a confluence with the as descending trend line we identified earlier. So the breakout of both the neckline and the descending trend line was a clear sign that buyers will be dictating the pace for the week. And luckily enough for us, we were able to take advantage of that bullish move. Once again, I would like to congratulate everyone who has been part of this bullish journey we took advantage of last week. Now, our center of focus going into the week is around the zone here. As you can see, that as soon as price action got into that $1,963.50 zone, we saw continued selling pressure around that area, giving us signs that sellers are actually present around that area. In fact, the continued selling pressure around this level led into a situation where price action is caught within a range between the 1955 and the 1963 zone to give us a flat channel to work with. And you know how we do it in this community. As soon as we have price action falls into this kind of range, we want to remain patient, waiting for structures to give us a signal in the form of either a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now, if we take a further look at what has been going on here in the last 1 week, considering the strong impulsive move that broke out of that neckline at the 1930, you will agree with me that a retracement phase seems long overdue at this point. And coupled with the fact that we had the breakout of the neckline, we always expect that price action may likely come back to retest the structure at some point in time to incite another wave of bullish momentum. So, with this perspective in mind, I'm of the opinion that we might likely be seeing a breakdown of the $1,955 level during the early hours of the week to signal a bearish momentum. Of course, this whole structure we have here still looking very bullish, but I'm of the opinion that we might likely be seeing price action retrace back into the neckline, and of course the descending trend line that was broken during the previous week to incite another wave of bullish momentum. And if it's possible, we might see price break down the neckline area and, of course, the ascending trend line to incite a sell off in this market. So, whatever happens, if price drops within the 1930, whatever happens there will decide what our next line of action will be. Now, in as much as I'm of the opinion that price might likely drop to the downside, which could be as a result of profit taking activities, especially for those who had bought at a very cheap price, let's say around the 1910 level. Of course, they will want to be closing in some of their positions. We cannot ignore the potentials of buyers too, as well. Now, this old flat range we're seeing here could still turn out to be a trend continuation pattern. And because of the situation here, a breakout of the resistance line could be an opportunity to join a trend continuation to the upside. So these are the things I'm going to be looking at on the XAUUSD for this week. And simply our center of focus for this week will be just within that range between the 1963 and the 1955, where we shall be waiting for either a breakout or breakdown of that range to give us a signal of where price action is likely going to be going for the week. Now, with that being said here, and after going through the market from a technical standpoint, I always want us to keep tabs with the fundamental aspect of the market, as you all know how important these fundamental factors are in the market. These fundamental factors often manifest on the charts in technical patterns and price movement, and by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and of course specific technical patterns. And with the information we have, we can have a better timing in such a way that we can capture any potential move prior, during, or even after the event. So, right here on the economic calendar, I was able to pull out a couple of events for the week. Let me see. Okay. I think, all right, I think we have it right here. So for next week's trading session, we are going to be focusing on economic event from the US docket. And for next week, the only high impact event is coming in on Tuesday, July 18, and that is the retail sales, which of course is an high impact event that has been a major indicator of consumer spending in the US economy. So we are going to be looking forward to this event, and of course, we shall be seeing the anticipation of this event reflect on the chart as price action. So I would like to pause the video here, but trust me, I will be with you in the comment section on Monday morning after monitoring our participant in the market will be reacting to this current market structure to decide what our next line of action will be. If you have found this content helpful for your trading decisions for the week, please show some support by giving this video a thumbs up. Your likes are valuable to me, and it actually helps the algorithm to push this video to a wider audience of traders who would find this material useful to them too. If you haven't already, I seek that you follow me by subscribing. Subscribing ensures that you never miss out on the latest ideas I share, as you will receive notifications whenever I upload new videos and commentaries. Looking forward to seeing you right in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful day, everyone. Bye bye.